there's a lot of nuance to an assumption, right? So you've got to make sure that it fits. And so deal flow is not necessarily drying up as much as, deals just aren't penciling, right? Welcome to the Cash Flow Chronicles. I'm your host, Jonny Cattani, and the founder of Cattani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Jonny Cattani. I hope everyone had a great 4th. I'm sure most of you are probably still on vacation, as you should be. I am as well. As you're listening to this, I recorded it last week for that exact reason. So hope everyone had a great 4th. Like I've said, it's my favorite holiday of all the holidays. I mean, food I love barbecue. So so much food is involved. Everybody's got the day off. It's the summertime. It's hard to find someone who's unhappy. So I love it. Of course, people still have to work. So we're very grateful for those in the healthcare industry and first responders and all those who keep us safe while we're out trying to blow ourselves up with fireworks. So thank you to all of those men and women who were willing to work. And I know obviously, you're incentivized to do it, but still, it's everybody else has a day off and you're working and, potentially laying your life on the line. So we're very grateful for that. So happy Independence Day, everybody. Happy 4th, happy July. I cannot believe it. The year is rolling right along. We're officially halfway through. So that's it. We are on the downward slope. And if you're in retail, summer has officially come to an end, and you're already getting ready for fall and the holiday season. So it's absolutely crazy how fast this year is going by. But alas, that is not what we are going to talk about today. Today, we're just going to go over some current events and some things that have been happening. And then I'm going to give an update on a new deal. Okay, so first, you guys probably saw last week that the Supreme Court blocked Biden's debt relief program for student loans. So that's a tough one. I did not graduate from college. I'll be the first one to tell you. Therefore I don't have any student loans. I did go to college, but I did not finish. It was not for me. So, it's tough because listen, if you went to college and got it financed, it's up to you to pay it, right? Every other loan has to be paid back, barring obviously bankruptcy, which ironically, student loans do not get relieved in bankruptcy. So that's kind of a bummer too. But it is definitely one thing that is weighing down my generation, the millennials, is student loan debt. And it's certainly hindering things like, buying their first home, right? Because it's going to go against your debt to income ratio. It's hindering things like starting families, because you want to be out of debt or close to it or be financially stable when you're starting a family. So it's definitely hindering. So from that aspect, I, can understand why some people would be upset about it. But the other side of it is, you chose to go to college, you financed it, and it's up to you to pay it. Now, certainly there are those out there who got a good degree, got a good job, and have paid off their student loan debt. And to you, I tip the cap, because unfortunately what you're running into a chunk of, a portion of people who went and got, basically underwater basket weaving degrees from private universities and, can't get more than, $60,000, $70,000 a year salary job because they really didn't study anything relevant to, the actual job market. Now, certainly, and I want to put this out there. So to those of you that want to be engineers or are engineers or doctors, anything medical, engineering, there are certainly some fields of study, some careers where education, specifically higher education, is absolutely necessary. And I'm all for that. If that's what you're doing, then of course, and you're going to end up with student loans. But, if you go to medical school and become a doctor, the logic is that, ultimately you'll come out and, eventually, you go through your residency, and then you'll join somewhere and ultimately become, whether you start your own practice or you join a practice and ultimately become a partner, and then, you pay off your student loan. So that's a big one. So it'll be something to keep an eye on for sure. Again, the millennials are getting hit pretty hard from that. I think Gen Z, and then I believe Gen A is after them. Gen A. That generation is probably, you're going to start to see a tapering away from college, which I really think is how you get a change, right? Is I think that you slow enrollment, right? You have people start going to technical colleges and getting just actual job experience and work experience, which we're finding is far more, I shouldn't say far more, but is starting to be more valuable in the workforce, meaning that if you look at it from a business perspective, to hire someone right out of college who studied what they're getting hiring for, they really don't have any experience, because we all know in college, you don't actually learn how to do that thing, right? Versus someone who, same age, right? So at 18, someone went to person A went to college. At 18, person B just got a job and did not go to college. And so what you're up against is a 4-year degree, with someone who really didn't study. Didn't learn anything, right? They obviously studied. Or B, someone who's been doing the thing for 4 years. From a business perspective, if I'm a business owner, which I am, and it comes to hiring, someone who has actual work and on-the-job experience is far more valuable, because it's going to cost me less to train them and get them up to speed and get them onboarded, right? Essentially, the logic there is that they'll be able to start producing much faster than the person who really has no experience, and you're basically going to be starting from scratch. All they have is a piece of paper. So that's kind of my take on it. Let me know what you guys think. Also, obviously, lawyers, that's another one you definitely need to get a higher education for. Suits is not a real life thing if you've seen the TV show. So there you have it. All right. So the next thing I want to talk about, the inflation. So obviously the overnight rate got paused in June. It's looking very, very strongly, like odds are very high that it will get raised again in July. It's looking like all the CPI indicators, everything, even the lagging stuff, is just not dropping as quickly as we anticipated. And I'll be the first to admit, I was definitely expecting it to drop a little bit, more exponential than it did. And so we've got another raise coming. I think it'll only be 25 basis points. But they're going to have to slow it until they can reach that 2% inflation benchmark that they're aiming for, which means, interest rates are going to keep going up, which is definitely a bummer for sure. There's no doubt about it. For many standpoints, right? For me, getting ready to sell my house, for those of us in the commercial real estate space who are, buying, potentially trying to buy properties, I think you'll start to see asset prices drop even more as we get a clear direction that, the Fed is not done raising rates until they get the adequate data that they want. Now, what I am seeing is you're seeing a lot of assumptions. So for instance, I got, there's a deal here in Salt Lake City that I may potentially raise money for. I don't know, the window's a little tight. It is fascinating. They give you like 2 weeks and you're like, okay, well, that's, I guess, 2 weeks eventually will be enough, but, I got a lot on my plate with this oil and gas deal, so I'll probably end up passing. But anyway, point is, assumable loan, 3.1% interest rate. So definitely not going to get interest rates like that today. So you're seeing a lot of assumptions. But here's the thing with an assumption is there's a lot of nuance to an assumption, right? So you've got to make sure that it fits. And so deal flow is not necessarily drying up as much as, deals just aren't penciling, right? Sellers aren't really dropping their prices down. Lending has tightened up. And so all of that combined has just made a very, very snug, little margin in either direction for some of these real estate deals, especially multifamily. That being said, perfect segue. That leaves space that when everybody's looking right at multifamily and self-storage, we're looking left, right? Oil and gas has entered the chat. And I have been doing so much research. Now, I'm not going to go into it because, again, we've got a webinar coming up. So hint, hint, wink, wink, join my list so you can find out about the webinar, thecashflowchronicles.com or CattaniCapitalGroup.com. Easiest one to remember, it's the same name as the podcast you're listening to right now, thecashflowchronicles.com. Okay, so I've had calls with the GP. I've had calls with their director of capital markets multiple times, CPA. I've had calls with their CPA. I've had calls with director of capital markets multiple times. Going to be doing some other things to kind of get this prepared. Potentially doing a webinar with the CPA, hint, as well, to help educate people on the tax benefits of the oil and gas industry. So much to get to. I'm not going to talk about it all today. In fact, I'm not really going to talk much more. But I want you guys to know that I have been head deep in due diligence. We've been getting this ready. A lot of information will be available, especially during the webinar, following the webinar. So you must join the list to get invited to the webinar. I'm not going to announce it outside of my list, minus some very private groups that I'm involved in, but it will not be public. So CattaniCapitalGroup.com, go there, top right corner, become an investor, scroll to the bottom of the page and fill out the form, and you will be on my list. And you will know when the webinar is coming. It is not this week. Obviously, you're listening to this on Wednesday. It's not this week. So that much you can eliminate. So anyway, again, I hope you guys had a great 4th. Happy holiday. Happy Independence Day. Thank you guys so much for listening. Join the list if you want to know more details, because this deal is a unicorn. I mean, massive, massive upside. Very, very excited. I've had multiple conversations. We're very, very excited to present this, and very confident that we will hit our number. And once we hit our number, that's going to be it, you guys. So once we hit that mark, there won't be any left. So, it's going to go quick. We're already, we're honestly we're almost 50% subscribed already. And I haven't even announced it to the official list yet. I've only talked about it here on the podcast and in select groups. And there was a teaser on LinkedIn too. But other than that, I haven't even done any real marketing yet. So it's huge. So anyway, appreciate you guys listening. As always, hope you had a safe and happy holiday, and I will talk to you on Friday. See ya. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CattaniCapitalGroup.com to learn more.